Today we'll be doing an update on Bitcoin. As you can see here, Bitcoin now is trading at 110, so 110,501 as of this recording of October 23rd. Last time we discussed Bitcoin, we saw that Bitcoin was gonna be going up and it got rejected at our 0.618 Fibonacci retracement and it came back down. We stated that potentially there was going to be another manipulation or sell-off, which happened. So if you didn't catch the last video that we did an update on, be sure to watch that to see exactly what we said. We said that this was going to come, Bitcoin's prices was going to come down, sell off, potential manipulation. We did pass on the 200-day moving average for a bit, and then people bought it up, institutions bought it back up, potentially fake out the retails. They got liquidated, and so usually that's how the movements go. It's always going to be selling down, up, come back down, and then usually go back up. And then the way that we would see if it's a buying opportunity would be if it does come back down and the low or the bullish momentum or patterns, candlestick patterns, showing a bullish pattern like this over here. Okay, so you see this down, you see the hammer, and then you see his full body green there, and this pattern here is higher than this pattern. So when that divergence happens like that, that's how we know, that's one of our cues that the bottom is in. But based on our previous video, we did discuss that the bottom will be in based on our leaping pad, and we did notice, we did get the leaping pad as it came back down here. Here's our leaping pad. You got the red leaping pad right here, and we mentioned that bright red is basically signaling that we are potentially bottoming soon. Bottom confirm would be when the red becomes a lighter red, not as bright but lighter. As you can see here, we got that right there for this. And the next day, which is today, we got even darker red, which is this small one here. So this also confirms that the bottom is in. We got the divergence, we got the leaping pad, and then we got the MACD that shows the momentum is starting to build and starting to cross back up from the blue over the red. So when we get that, that's going to be a huge buying volume and momentum going to start past and potentially break this zero line, and the MACD start flowing back up, and that's when we're going to see Bitcoin break above 115 and go back into our golden buy zone between the 115 and 119, roughly around this price here. Once we do get back to the 115, we're going to see a rejection. We're going to see a rejection like this over here. It's going to come back down, and we'll know if it's going to break through if it comes back down halfway. So it comes up and then it comes down, and we start seeing a more bullish pattern like this at this level, because we want to see that divergence, right? So we want to see another divergence like that. It bounces up here and then it starts going back up, and that's when we're going to be able to break up from there, and that's usually how it goes. Okay, so that's what we'll be looking for. Okay, so we're going to be looking for that divergence around this price, around this area here between the 115. So potentially we are in a bottom. I believe that we are in about 98% chance that we are in a bottom, and we are going to be starting to go back up. In our X account, we did mention that the bottom was in when this hit around here. When we notice bright red for the leaping pad turn a little bit darker around this price, we did mention that this would be the bottom. So that price was roughly around 107, 108 when we made that post on our X account. So if you do want to follow us, we'll go to our X account, and then you get notified for our to-date alerts. So that's basically what is happening with Bitcoin right now. Okay, so another thing that we want to discuss here, we're going to go into next week. Okay, so for next week, for October 27 to 31st, we're going to do a breakdown of next week's based on the events that's happening. Okay, so next week's theme based on our indicators, the trackers that we've been tracking over here. So our tracker shows that we are in a buy pullbacks opportunity. Okay, so we are still, our phase is still in a long-term bull, but we are in a short-term drain. So our recommendation, again, not financial advice, but our recommendation is buy pullbacks and DCA. Short-term pause is likely happening right now due to some of the events that we'll be discussing that's preventing people to be more dovish. So we'll be covering that based on the Fed's event that's happening. Okay, so you can see our long-term liquidity is at 73%, so which is great, but we do have the last 24 hours minus 28.60 liquidity that's being pulled out, being drained. But other than that, the VIX is at 17. We mentioned that the VIX need to be around the 15 level. All right, so now let's look into our VIX here. So the VIX, like we mentioned in our previous video, if you haven't caught that yet, we did mention that when the VIX shot up to here, it was a good, this level of 22, it was a good hard reset. And we noticed that around our range here and come back down is very bullish. So the VIX is an inverse volatility index that tracks the opposite of the market. So when the VIX is high, the market's going down. So the markets did sell off in the last couple of days, as you can see with it going up like this. So the VIX did shoot up to 28 and came back down. That's very bullish when it does that. So when it does that very rapidly going up 28 and then coming back down based on Tom Lee, that's very bullish. And when that happened, you start seeing the market going back up. And now the market is, now the VIX is coming back down here. So that's very bullish, and that's the reason why the market's going back up right now. So with the VIX MACD showing a sell sign, that's very bullish for the market, because sell sign for the VIX means that the VIX is coming down and the market's going to go up. And so that is very bullish. So when we got this signal right here with this buy signal right here, and at this level, which is October 22nd, which was yesterday, we did get the leaping pad notification around here. So we did get volatility index green projected right there, and then we got the leaping pad to confirm that. So that's how we knew that the bottom was also in. Over here, we are starting to converge back up from this exhaustion. This is our price exhaustion here, and it's starting to get very exhausted. So it's going to start going back up. But we do need one last confirmation for this rally to be going up hard. This is a speed trend analyzer, and this will tell us how fast the trend is going to be going. As you can see here, the downtrend has subsided a little bit and then came back down hard and then hard, and now it's starting to slowly, based on the past bars here, starting to slowly lose its momentum. We want this to look like this, come here and then slowly become straight, and then we want that green. Once we get that green, it's confirmed, and then Bitcoin or the market will be shooting up very rapidly based on the momentum here. So the momentum and the speed will be dependent on once we see that green. When we do see that green on the speed trend analyzer, we're going to see Bitcoin fly past and break through the 120 level once again. So that's basically what we're waiting on. Okay, so now let's go back to our breakdown of next week. So next week is going to be a big one. So we got inflation, we got the Fed, we got GDP all dropping. So that week, next week, it will decide if the rally will be going into year end or get one more healthy pullback. Our model right now is showing that we're still in a long-term bull phase, so we're just taking a short-term breather. So our translation based on our tracker, it's buy dips, avoid chasing green candles, buy in the red, buy when it's selling off, especially when we're still in a bull market. That's how wealth is created, is every time price is low, you want to buy low, sell high. So you want to do that, obviously DCA every time it sells off, not buy a whole chunk, because you want to have some money left over to keep on buying the dips. We want to buy the dips as long as we can, especially in a bull market, and then most likely it's going to go back up. And when that does go back up, you have such a low dollar cost average that you can be in profit when it does go back up to an all-time high. Okay, so on Monday, durable goods orders. So we're going to be watching for weak data that actually helps the Fed stay dovish later this week. So our liquidity outlook, 5 to 9 days of cooling. This will explain the slower movement early in the week, okay, the liquidity outlook here. So if the yields ease, expect strength to rotate back to tech and growth. And the names that we'll be watching will be Nvidia, Apple, Microsoft, AMD, Palantir, Intel, and MP Materials. And Bitcoin and Solana, both are consolidating near their exponential moving average support area. So our message is, if Monday opens weak, that's not bad. It's an opportunity setting up. So every time it's selling off, we want to be buying, okay? And Wednesday, we have the Fed and Bank of Canada decision. So this is the main event. Expect volatility. So on Wednesday, prepare. Do not buy anything yet because potentially there's going to be a big volatility. You want to see the base. I believe it could be selling off. Another pullback coming on Wednesday if the numbers don't look good. Okay, so the market expects a 25 basis points cut, but tone matters more than a move. So we'll be looking for the language. Okay, so the Fed will likely sound dovish but cautious. So they'll be saying things like data dependent type language. So when that happens, the market could potentially stay neutral, and at the end of the day, then market will probably start buying in again because they'll have time to digest the data and the news. So the VIX rising, and the breadth we could see dip before bounce. Okay, so we're looking at the VIX rising here. Most likely, like I mentioned, if the VIX comes down, the market's going to go up. So if the VIX rises during the speaking here, then you're going to see that the market's going to start to dip one last time potentially before it goes back up. Okay, so M2 liquidity is rising, yields falling, supports rebound post Fed. Okay, so these things are things that you should be focusing on Wednesday. Would be Palantir, Nvidia, Tesla, MicroStrategy, and Bitcoin. And Intel and AMD, they will have a base, so then you can start DCAing setups for patience entries. Okay, so the message for Wednesday would be, if you get red to green reversals after Powell speaks, that's our cue to scale in. Okay, and then Thursday we have GDP growth report, so expect around 3.8% growth. If that holds, confirms soft landing, then it's going to be bullish for AI and growth stocks. If it misses, even more rate cuts anticipation, short-term dip is a buy zone. Okay, buy Qs, they're all above the moving average, but they're cresting, so they're reaching overbought level. So wait for confirmation, but don't chase. So we want to see it come back down before we start buying. Tesla and Nvidia still holding EMA support, so clean momentum setup, so still get there. Bitcoin MicroStrategy forming volatility squeeze, could break higher if yields drop. So these two are what we're waiting for to help see. All right, so the message for Thursday would be, Thursday gives us confirmation. If GDP holds, risk asset leads the next leg. Okay, so for Friday is our core PCE inflation. Fed's favorite inflation measures will be forecasted at 0.2%. If it comes in soft, confirms inflation under control, likely green finish to the week. If it spikes, expect one more dip before November liquidity rotation. So focus on Bitcoin, Solana, Tesla, Nvidia, Palantir, and AMD. So our message for Friday would be, if inflation cools, that's our green light. If it doesn't, don't panic. Use it to DCA into our weakness. Okay, my low sell high. So our overall outlook, the macro trend is still bullish long term. Our short term is mixed liquidity, so we're going to be buying pullbacks, but we're not going to be chasing any sort of rallies. Okay, we like to buy in the red, not the green during bull markets. Inflation stable, Fed easing tone, yields softening, so bullish setup forming. Top conviction watch list would be Nvidia, Tesla, Palantir, Bitcoin, Solana, and MicroStrategy. So the base DCA holds would be Intel, MP, and AMD. All right, so our closing message here would be, this week's about patient and timing, not prediction. Okay, so we're not going to fear the dips. We're waiting for the setups because they're not set back. So we're going to let the Fed and the data do their thing. We'll react, not overreact. We're going to wait for it to go down. If the markets overreact, then we'll react. Okay, we're going to buy the dips. So profits are better than wages. Stay calm, keep stacking assets, and we'll see you in the next update. Okay, thanks again for watching. Bye for now. Okay, see you in the next video. Bye for now.